Africa. We're seeing very positive recovery in this market today. The Nigerian stocks continue to move forward, and standing by is Chinenyem Anyanwu, analyst at is the CEO rather of Dependable Securities. Chinenyem, thank you very much for staying with us. I really want to hear a lot more about the sell-off that we saw recently and whether or not you think this is going to come back at some point. Many people have linked that to the foreign investors, given the concerns around the Naira, even though that has stabilized a little bit over the last few days. But your take about the selling pressure we saw recently, do you think it's over?
Well, foreign investors and their style of operation, they are not quite like the investors of Nigeria. The Nigerian investor keeps, foreign investors trade. They buy and sell stocks. When the weather is clement, they stay. When they sense inclement weather, they go. And for a period, because of what's going on in the political economy, because of the oil price and a few other things, they seem to have taken a flight for a moment, but they must come back. And I think they will not take long to come back because the prices are good for them to return.
All right. Do you get the sense, though, that the locals are stepping up to compensate for that loss in demand? Because today we're seeing about 3 billion naira worth of deals. Let's talk about the pension fund managers. To what extent are they buying into the recent dip?
Well, the locals are actually trying to fill the gap. But to what extent? You know, the characteristics of these two groups is different. That they can buy, can they trade? If they cannot trade, they cannot create liquidity. The pension fund also keep, at least to a large extent. The gap they are filling, it's to some extent, it's not a full filling of the gap that the foreign investors do.
All right, I think you make a very interesting point. The pension fund managers tend to buy and hold, especially if they see value, and many people are saying there's a lot of value in the market right now. But then we also need that trading activity, which the foreign investors participate in, and then, of course, the stockbrokers. So let's talk about that. Trading, especially by stockbrokers, to what extent do you think that dip that we saw recently has hurt the potential for us to see a lot of trading activity from the stockbrokers?
Well, to the extent they can't just fill that position. The pension fund administrators, the best they can come to is to buy and hold for a short while. The trading, in the actual sense, the making of capital gains is actually done mostly by foreign investors. To extent they can fill, but they won't be able to fill that full position.
But are you saying that the stockbrokers as well, maybe with their proprietary portfolios, are not engaging this market? I would have thought that given the volatility we've seen recently, that many of them may even put their capital at risk here. What's your view on that?
No. For the stockbrokers with their proprietary trading also plays a role. But we are talking about volume. We are talking about what foreign portfolio investors can lift in terms of volumes. Our capital need for that is not as much as those of the foreign investors. All
right. So we've seen this market dip, and now we're seeing a recovery. Let's talk about the opportunities that you are seeing across the board, and starting with the non-banking stocks, because I guess we always have to split this market into banks and non-banks. Let's talk about non-banking stocks. We've seen Nestle recover. We've seen Forte Oil recover very strongly indeed today. Your take about the opportunities in non-banking stocks?
In the banking stock in particular?
Non-banking.
Non-banking stocks.
Yes.
Okay, a couple of them also are doing well, and earlier I mentioned the Transcorp. Transcorp had a very heavy bid today that was not satisfied, and some of them, that one falls into that category. The oil sector, some of them are also good compared. One of the losers today was actually Dangsem at the time we were reporting. Dangsem is whenever it loses, the market quakes. But it's actually a non-banking stock, and opportunities are also there.
Let's focus on Dangote Cement for a little bit. Do you think the sentiment has totally changed for that stock? We've seen it fall back over the last few sessions, and many people linking that to the recent activity with respect to their pricing of their products. Do you think that has changed the dynamics for Dangote Cement?
I didn't get the last thing you said.
Do you think that Dangote Cement is no longer as attractive as it used to be? Because we're seeing sentiment change for that stock. And initially, one would think maybe it was because the market was falling, but now that other stocks are recovering, we're not seeing Dangote Cement recover.
Yeah, okay, yes. Dangote Cement in the mid-term short run actually should, because You know, the interesting thing that's happening there is the dropping of that price of that stock in the marketplace. People feel that it should actually generate people to buy more and do volumes on that. So one expects that they should be one of the ones that one will look into.